Have you ever wondered what sort of habits everybody else has when it comes to their finances? Maybe you could learn a thing or two. What to do, what not to do. We're going to get into that today. Hi, everybody, and welcome to another episode of Dollars and Cents, Hapo Community Credit Union's Financial Literacy Podcast. We have a couple of Hapo employees in the office with us today. We have brought back Jacob. We have brought back Susan. And for the first time, Kara is joining us. Today, we're going to be talking about lessons learned, people that have joined the financial institution and the things that maybe you didn't know before you started working here and the things that you understand now that you've had an opportunity to work with membership to kind of see the inner workings of the financial industry and maybe be able to provide a little insight to the listeners about things that maybe they could also understand about their finances and how they could do a little bit better. Welcome to the podcast, everybody. We're going to go around the table real quick and just basically what's something that you have learned that has changed your perspective on your financial outlook since you've been working here. Susan, you want to start?
Sure. I think from my department, it's don't believe everything you hear and don't believe everything you see, especially on social media.
Ah, yes.
Not everything out there circulating is accurate. Mm-hmm. And I can think back to actually a long time ago when I was in high school in personal finance, they told us things in regards to credit that I see people still clinging to now, and it's not accurate. You can't just call up your lender and say, well, can't you just give me a goodwill? No, we can't. There's these things called laws that we have to abide by. So
sometimes those laws change.
Yep. And then you've got all the random people out on all the different social media platforms now spouting all kinds of information. And you don't know who this person is, what their background is, what their credibility is, what gives them the right to be saying the things they're saying, and is what they're saying truthful or not. How do
Absolutely.
you figure that out? We've
thrown that word around a number of times on the podcast, fiduciary. Very important when you're dealing with somebody who is dealing with your money, because that means that your best interest is also their best interest. Jacob, how about you?
Let's see. I think for me, my biggest thing has been spending habits. I did never realize, or I was not under the impression that not everybody checks their account daily. So I think for us being in the finance industry, we know how big online banking is. We know how important it is to be on top of really just your finances in general. You're able to pick up on spending habits. You're able to pick up on stuff that you do and you don't even think about it, right? So that's probably my biggest thing is just, hey, check. It doesn't cost anything. It's free and it's pretty quick.
Love that.
Kara?
My biggest thing I feel like is understanding how to, like for me personally, credit. Building credit was something that I was never taught. My parents didn't have that. So coming to a financial institution where that is one of the most questions that we get asked, and having classes that you can take to better help you as well. I've sat in with members who come in and they're like, oh, well, they told me to max out my credit card and just spend it up or pay it off little by little. And it's like, no, that's not what we recommend. Please don't do that. So
we don't know who they are, but they happen to be wrong. Probably our social media friends providing the strange random advice that people are getting. Credit score is absolutely one of those things that matters because it gets checked all the time when you're looking to get a car. When you're looking to get a home, the rate that you get on your loan will depend very much on that. So absolutely one of those things. They don't teach you a lot about that in school or building up to it unless you have parents that maybe are already understanding of those things. It can kind of bring you along. And that's one that matters quite a bit. So in these things, when you guys came to learn these kind of traits and tools, was it because of patterns that you saw with members? Was it because of something that you were taught and kind of just got it more solidified as you began working in the industry as well?
I'll go first. I think for me, it was just seeing the patterns that people don't see themselves. So me being a financial coach, there's been plenty of instances where people are wanting to get their finances in order, want to create a budget. And it's not that they don't make good money. It's not that they don't know how to budget, right? It's the unnecessary spending, really, right? Like we talked about before, microtransactions, but even convenience store transactions. I see too many people, whether it's blue collar, white collar, that go to the convenience store, they go to Circle K, they go to the gas station every single day before work, on break. And hey, $5, $9 a day isn't terrible, but if you're doing that, 5 times a day, 5 times a week, maybe 2 times a day, it adds up very quickly, and that's something that, hey, if you do it every day, like, hey, I have a break, I'm gonna just go to the gas station,
get a pack of Skittles.
Yeah, and and again, $3 here, $3 there, but they add up, man, pretty quickly.
Well, especially if it's 5 times a day. I was going to ask, are you looking into my finances here? So, I'll head down to the employee break store and get myself some Mike and Ike's every now and again today.
I have to stay away from those, which is like, yeah.
No, those you're not wrong. Those do add up. If you're spending $3 twice a day all week, you're sitting $30 by the end of the week that you probably could have put towards something else. Add that up over time. It's kind of the avocado toast, coffee in the morning type of argument. Yep. There's nothing wrong with those expenditures, but when that is your everyday, you can budget for it.
Absolutely.
You can absolutely budget for it.
And hey, I'm a big advocate for that. When people come and see me for financial coaching, I never say don't have fun, don't enjoy yourself, right? Treat yourself, but do it adequately, right? Hey, my wife loves Red Bulls. Costco sells them, I think, 24-pack for $40. I'll do that all the time compared to, $9 for something at the grocery store.
Exactly.
Store.
Yeah, planning ahead, budgeting, you do not have to take the fun out of the budget. You can budget for fun. A lot of people do look at budgeting as if it's the bad guy in the financial relationship. Well, I can't do it because my budget says I can't. It's going to hit me over the knuckles with a ruler. How about you? How did that credit score knowledge kind of come to pass?
For me, like how I became aware of my own.
Sure.
I would say when I went through FSS training to become a financial coach, it took time because at first you get comfortable with doing or having that role. And then little by little, just asking questions. I feel like our card services department has helped me a lot with my questions, especially on the teller line as well. Our members have those questions. We can reach out to them and ask them. Our underwriting department is really good at asking those questions. I shadowed them finally, and that was also, it was really great because they had their own idea of, yes, it's good to finance a car, but sometimes it's better to save that money and then, cash price.
Now, you mentioned members having that question on the teller line.
Yes.
How often do you see, or what type of patterns do you see with the members coming into the teller line asking questions about credit score?
A lot. A lot of members don't have the coaching when it comes to credit cards. A lot of members don't know how they work. Sometimes they're told by their friends, like, hey, you should get your credit card, but they never are told why.
Yep.
Which for me personally, I always like to tell them, hey, this is your credit card. If this is your first credit card, this is how we usually like to recommend. Don't go over that 30% utilization because that is a big, what your score is based off of.
Yep, your credit mix.
Yes. So they have a lot of questions that they do have, but it's pretty much them coming in with advice that they get from family or friends that is not always the best advice, but
or social media.
Yeah,
right?
yeah, or social media. Yeah.
Some of us are lucky enough to have family friends that are raised with the correct information about credit scores and building those. Not everybody has that foundation. You guys both mentioned going through becoming financial coaches. That's actually why we have these services, so that people can come in and ask questions of people that are knowledgeable on this, be able to help them through. That credit mix. We had a good deep dive on the podcast a while back about what makes up a credit score and a credit mix and how it's actually different based on what it's being pulled for, as well as what service it is being pulled from. Great episode if somebody wants to go listen and get a deeper dive on what that credit mix comes out to, and kind of how this is much more complicated than just I've got a 751 credit score.
Right.
There's a lot more that goes into it than that. All right, and Susan, do you just spend a lot of time on social media looking for people?
No, I went down rabbit holes for the podcast. No, my background is I came from automotive dealerships. I worked in dealerships for about 25 years. So I've seen the other side. I know the conversations that are had when people come in to purchase vehicles, and I know about realistic and more commonly unrealistic expectations when people come in to purchase vehicles. And I also worked for a boat dealership. So that's a longer term commitment people are entering into there. They don't understand, this boat, it's $250 a month. Okay, but that's for 10 years.
Yeah.
120 months.
That's not just a contract. That's a full out relationship you have just entered.
Yes.
And that's not to mention, your maintenance, your insurance, whatever else that goes with it.
Yeah, becoming the boat friend.
Exactly.
I mean, that's a whole lifestyle commitment in and of itself.
Or people coming in and thinking, oh, I'm going to buy this fancy, expensive car. The payments are only. And then later they're coming back and, I can't afford the insurance for this.
Yeah, all of the things that come along with it. It's a great car. I can afford that. I can afford the insurance. But it goes through gas.
Right. Yeah.
Yeah, we actually have another coworker who recently did get into a new car. And he waffled on this one because it was out of what his budgeted monthly payment was expected to be for this. And he did a little we'll go wallet searching, little soul searching, and reevaluated his budget, came home with the car. And I've noticed personally that he's stuck with his lifestyle adjustments that allow him to do this. It wasn't so far out of his range that he couldn't afford those things, but he actually did take a look at his budget and all of those things to kind of balance. Is this, I really like this thing. Is it worth it? And so far, he does not regret that move that I can tell. But he has absolutely made those adjustments and made the shifts to prioritize fun in his life over just a reliable vehicle. He now has a reliable, wonderful vehicle that he loves to drive. You kind of brought up some unrealistic expectations from people that you've seen in those, which kind of lead us down this path. What are some of the patterns that you guys have seen that you would qualify as red flags? The type of thing that you see people coming in doing regularly that are not excuse me, that are not good. They're the type of things that people should avoid attempting to do.
Missing their credit card payments, missing their loan payments, being reported late on your credit has a far bigger impact than you think it does, and it sticks around with you for 7 years.
Yeah, I was going to say
and
a while.
One reported late payment can mean the difference between you getting a house and not getting a house 5 years from now.
Yep.
So it's something people, I think, need to take a little more seriously than they do.
And I feel like not a lot of people know that. That's the sad thing, is we don't know that how it can affect us in the long term of wanting to buy a house.
Yeah, one of the items we talked about in building a good credit score is making a monthly payment, making your payments on time consistently. It doesn't matter if your payment is $500 towards your credit card because that's what you've got run up on there, or if it's $250 because you went and picked up a box of Mike and Ike's at the convenience store, swiped your credit card, and then made that payment on time. That it's the fact that the payment was made on time that really hits the credit, but it takes way more consecutive payments made to build that credit than it takes one miss to really undercut it.
I've also seen, it looks like Jacob said, kind of like people are living off their credit cards for their day-to-day expenses.
Right.
I was brought up, that's not what the credit card's for. The credit card is there, use it here, use it there, keep the credit active, but don't rely on it for your daily life. If you are relying on a credit card for your daily life, you need to reevaluate some things because that balance on that credit card is going to keep going up and you're charging way more a month than you're paying. You're never going to get that paid off.
Yeah,
right?
that's where the slippery slope comes in.
Yeah.
That's what I wanted to pick up on, right? Was for a red flag for me is credit cards and points. I'm not saying credit cards are bad. I'm not saying points are bad. However, when you continue to just use your credit card and you're making minimum monthly payments as compared to paying it off, compared to chunk payments, hey, yes, you are getting 4%, 4 points back or 3 points back. And all that is great. And that is free money if you're using it correctly. But not too many people are using it correctly.
And when you carry a balance.
And that's the issue, right? Yeah. That is the issue. And again, by all means, if you have automatic payments, it works. But I mean, how easy is it to, like you said, have somebody miss a payment, forget to make a payment, and then now their credit score is, it's taken a hit for 7 years. And it's
and generally an automatic payment on a credit card pays at the minimum payment required, which means that for you to make that chunk payment, if you're trying to utilize this, you've got automatic payment set up so you're not missing a payment, but you're regularly running up more than that minimum payment on your credit card, that means that you're going to have to actively go into your account and make those additional payments. Automatic payment isn't just going to pay that balance off for you if you want it to.
Not all of us are all that disciplined either.
And I think that you brought something up earlier, Jacob, about people looking into their finances. When you've got automatic payments set up, how often do you need to go look at that?
I mean, shoot, it's. I feel like it's different for us because I feel like all of us check our online banking at least once a day. But it's even talking to members day to day. You come to find out a lot of people do not check it as often as they should. So for me, checking it every single day, I'm very up to date. I'm aware of every single bill, automatic payments. I'm aware of all of that. But for the average person, take the 5 minutes out of your day, right? Take the 5 minutes out of your day. Be aware of what you're paying automatically, right? And then, hey, if that's not satisfying you, if you want to pay it off, by all means, pay it off. Please pay it off.
Make it part of your morning routine. Pour yourself a cup of coffee, log into online banking, take a look at your balances, then, pop the toast in, make yourself a breakfast sandwich, let the dogs out, whatever that morning routine. Just slap one simple routine item into your day, and that can possibly make the difference.
Yeah, absolutely.
Right.
How about you for red flags from Tellerline, seeing people come in asking questions about credit score, that talking about their family and all the wonderful information that they've gotten?
Yeah, I was just going to kind of go back off on the credit card thing. You thinking that you have free money with the credit card. I feel like that's a big red flag. Is, I got $1,000 to spend. No, you don't. And that's where the 30% utilization comes, because out of that $1,000, you only want to use the $300 at most, right? So if you don't have the money to pay it back, don't use it.
Yeah, or the credit limit increase that you get offered. Be like, oh no, right. I had a credit limit of 1,000. Now they just offered me 5,000. Look at how much more money I have available to me.
Exactly.
Goodness, yes.
Yeah.
How about green flag habits that you guys have seen amongst people? We've been kind of mean to the people out there for a moment, but the lessons to be learned are mostly from like, please don't do those things. At the same time, what are some habits that you guys have seen, patterns that you guys have seen that people should probably try to emulate more?
For me, the biggest one I've noticed is brokerage accounts, right? So Fidelity, Charles Schwab, Edward Jones, things like that I see that are automatically set up and deducted from accounts. I love that. Big green flag for me because, hey, that shows me, one, not only that you're saving, but you're also taking it to another step and wanting to invest your money and grow your money. Love that. Big green flag for me.
Also, that now we're at the positive side of automated payments into a thing where you don't want to look in on it regularly. kind of two sides to the same coin there.
You take a look at it, right? 6 months into the year and you're like, oh my goodness, I've got quite a bit in there, right? And hey, it didn't even cross your mind, didn't even lose anything over it. So big green flag.
That's awesome. I would say acknowledging that you can ask questions, seek advice. A lot of members do come in and ask to sit with a financial advisor. So I feel like that's a good first step to
big
going
green
the
flag.
right path. Yeah.
Yeah. Big green flag. knowing that somebody else has more information about this than you and being willing to accept that and ask the question.
Yep.
Susan, how about you?
Well, I'm not a frontline person, but personally, I am now up to 3 grandchildren. So I have set up savings accounts with automatic transfers for each one of them.
Okay.
And 2 of the accounts, the kids are old enough that there's enough money that now it was suggested to me to roll them into CDs.
Okay.
Since all I'm doing is depositing. So
Yeah. Utilize the different account structures that exist out there. If these are, in the case of these CDs, not a lot of access to that money, but a lot more gain over time.
yep.
Right. Especially if it's just sitting there.
Yep, that's all it's intended to do, is just be a little surprise for them when they turn old enough to take over the account themselves.
Right.
There you go. And whether this is saving for education, for a nice treat on graduation, for whatever it happens to be, this is that type of nest egg type of building that we get a lot of hearing. When is the right time to start? And it's yesterday is always the right time. The next best time is today.
Well, my third grandchild is not 2 months yet, and he's already got a savings account.
I love that.
And mom and dad have already asked, hey, what's the account information? We want to set up auto deposits into his account. So not only am I putting the money in now, but they are bringing money in to put into the accounts too.
Even
and they
better.
love the fact that it's with a bank that they're not directly associated with. They have no access other than to put the money in. They like that little bit of distance between them.
Right.
Love that.
That's awesome.
Yeah, that type of thing, the planning ahead, the saving early, utilizing the different account types in order to maximize what that money is doing. Because if it's just sitting there, then the number one thing that everybody wants to look at is how much interest are we gaining on this money that's just sitting here waiting for somebody to come back to. And in the case of the CDs, you've got options of just how long you want that to sit there before you can do something else with it, which may very well be buying it into another CD. Yep. Have you guys noticed patterns of people that you would consider that you've run into that are financially intelligent, financially stable, the patterns that those people have that other people should probably look to emulate?
I think for me, the biggest one, it would go back to prioritizing your savings account, whether that is, automatic deductions going into a separate account, whether that is funding CDs even at a different financial institution, prioritizing and just being prepared for the future. It's uncertain. And, it's something that I tell people, even if you live below your means, emergencies happen. And then that's where, you're kind of above, or you're above what you can actually provide, or I don't know if that's the correct terminology or words that I want to use, right? But it's, you're not drowning yourself trying to stay afloat, right? So taking it or making it a big priority to actually save and plan for just future success, that's what I'll always die. I'll die on that hill, right?
Planning ahead, having a plan, sticking to that plan. I would say that we probably know, every one of us probably knows somebody who dreams of being rich and famous who doesn't do that. I still think about that, how one day I will be a TikTok star and make all those sweet internet dollars. That's never going to happen. But I have not put together a plan to become TikTok famous in any way, shape, or form, which means it'll never happen. But if you want to have that financial stability, that wealth, everybody wants that. But if you don't have a plan, if you don't start to execute that plan, you don't really make any progress towards that goal. Very rare that we're all going to randomly have that rich uncle that we never met pass away and leave their entire fortune to us. Monopoly lied. How about you? Have you seen particular habits, patterns amongst people that you've interacted with here at the financial institution that you see as solid patterns from financially stable individuals?
I would kind of agree with Jacob. Most members or anyone that I know personally just have those savings accounts that they have here or at other institutions. I personally don't have that, so I can't speak on personal experience, but I do notice a lot of members, they will come in this, they'll say, oh, I'm broke, even though they have that savings account, but they don't look
Not
at
trying
that
to get into
savings
that.
account. Right. It's there, like Jacob said, as an emergency. So I think that's also very important.
Kind of the mindset that I do have this, but I don't have access to
Right.
this.
Right.
So it's kind of like how my younger brother, when he first bought his house, referred to himself as housebroke. And not like his cats, because I don't know how many of them are actually housebroken either. But the fact that like all of his income and everything was going towards this, he was not actually broke by any means, but he understood that house poor meant his income was
Accounted for.
It was absolutely accounted for in that moment
Right.
of hey, yeah, this is here. It serves a purpose, and therefore I can't go dipping into that. Susan, how about you?
I'd say know where you're comfortable with spending, like when it comes to a home, when it comes to a car. I know personally when we were approved for our home moving here, we were approved for far more than I was comfortable with when I worked
there
out
you
the
go.
monthly payment. I was not personally comfortable with paying that much a month. So we dialed it back and said, well, yeah, we're approved for this, but we're only going to look for this.
Yep.
And I'm glad that we did because things changed.
Property
Yeah.
taxes go up.
Yeah, taxes change and insurance and things like that. And you just never know where life's going to take you. Same thing with a car, you know. Now you go in and you look at buying a car, and I see accounts come across my desk, people's payments now on cars. They're darn near mortgage payments.
Absolutely.
Yeah.
Or are what some
Absolutely.
people's mortgage payments are. Some of them are my mortgage payment, which is way more than I can fathom having to pay for a vehicle. And then some people will say, well, that was more than I wanted to spend. But you chose to spend it.
Signed.
Yep.
You could have gotten up and walked away at any point in the transaction, but that shiny, sparkly new vehicle
Yeah.
spoke louder to you than you talk to yourself.
Absolutely.
It's okay to say no. It's okay to say, no, I don't want this. No, I don't want that. Be wise about things. If you're on edge, maybe think overnight about it. You know, they say if it's too good to be true, it probably is. If something doesn't feel right, it probably isn't. There's a lot of truth to that.
I love that.
Well, and in that situation, it's very easy. The minor bump that you see, like, oh, it's a $350 a month car payment, but this other one's only $375 a month. That's only $25 a month.
And before you know it, you're paying over $400 a month
Exactly.
because all these other things got added in, or you start out kind of on the higher side and you realize, oh, there's things here that I don't really need. Not saying you can't have those things and that they aren't fun or important, but just think about them. And, you know, if you're on the fence about, does this sound good or not, give yourself overnight.
Yeah.
Be sure about it.
Absolutely. We talk a lot, especially when we talk with our fraud team, about taking that beat, take that breath, think about it. Don't ever let the sales guy in this particular situation tell you that you have to make this decision right now, because you don't have to make any decision. You might, if you don't make that decision, get a different car.
Absolutely.
You're the one in control. You're the one that has the power of picking up that pen and signing your name. They don't have that power.
Exactly.
You might feel like they're influencing you, bullying you, what have you, but at the end of the day, you have the power to sign on the dotted line or not for whatever it is.
Also, I really like the statement that you made about we were approved for this, we weren't comfortable for this. So like your means were at you're approved for this, but the comfort level is lower, and then sticking with that. Because I think one of the things we talk about credit score, some of that people don't understand is the debt to income ratio. And that is, you might be making more than enough to cover all the things that you have going right now, but that's going to prevent you from being able to do anything else in the future.
Exactly.
Because you're just too extended to be able to make that next move.
Or what if something happens? What if
That-
something comes up? You know, the girls' trip to Vegas or whatever, and you don't get to go because you don't have the money because you're barely making your ends meet.
Yeah.
Nope.
decide what.
You got a great house and a really fancy car and no fun with the girls
and you
in
can't
Vegas.
go anywhere and you can't do anything. You can't drive the car anywhere and
That's it.
you can't have anybody over to the house to party
Exactly.
Exactly.
Because they're in Vegas on the trip without you.
that you couldn't go on.
Yep.
All right. So let's go around some kind of last second ideas. Let's get some closing thoughts on this. What are some of the habits that you've picked up since you have been working here or plan to with that emergency savings account?
Yeah.
That you have kind of changed your way or that you've learned from the patterns that you've seen from people, your interactions?
Like you said, savings account. And also, like you mentioned as well, if you're not using that money, put it into a CD. It's very beneficial, especially if it's just sitting there and you don't plan to use it. I know for some people it's scary to say, well, what if I do need that money? Well, go for 6 months. 6 months is a good period of time. If you don't use it, then you know, okay, next time, 12 months.
Or
So-
look into some of the other options, like a money market account, where it's kind of in between those two. You get a little bit of access to it if you need it.
Yep.
And it does a lot better than, say, a standard savings or a checking
Right,
account.
exactly. It's tiered base. So, yeah, and they can still withdraw if they do need it.
Let's see. For me, I think there's two. One of them, now this is not financial advice as we never give, right? But one would be like afterlife planning. So trust accounts and things of that nature, estate accounts. I've seen how beneficial they could be. And again, I won't go too in depth with it, right? But I've just seen the success that comes with having them. So that's something that even at 27 years of age, I've looked into. So that is a one thing. Another one that is really big for me is I have this special member. Frequently, we discuss savings frequently. Something that they have given me that I take even into my own finances is when dividends get posted, whether that is a CD, whether that is a money market savings account, we bring that balance, that dividend balance, up to the next 100. So for example, you can add on to some of our CDs here at Hapo. With that being said, there's a minimum of $100 that requires them. You have to have a minimum of $100 in order to add to those CDs. With that being said, whatever the dividend is, we'll add an additional $100 to bring it back up to an even number. That's something that I take now in my own finances. And for me, I love just seeing a zero balance. So it looks good. And then I also know that I'm saving even more as well. So I love it. I love it.
Yeah, that's right in there with kind of the roundup concept that you can do with savings accounts. You'll see some players like, oh, every time you swipe a debit card transaction, we're going to round that up to the nearest dollar, but that extra we're just going to dump into a savings account for you so that you're saving unconsciously as you go. Like 57 cents here, 42 cents there.
And it adds up. It adds up. Absolutely.
I back Jacob 100% on the afterlife planning or life planning, whatever you want to call it, from personal experience. There's always going to be things that we don't want to think about, but we do need to think about them and we do need to be prepared for them. If you have parents, especially in a health situation or an age situation, keep an eye on them and what they're doing and make sure that there's a backup plan.
100%.
Well, and like with the afterlife planning or end of life planning, I believe a lot of that comes down to what are you leaving your loved ones with? Are you leaving them debts? Are you leaving them an inheritance? Is this my uncle that I've never met that gave me a lovely windfall? Who somehow loves me more than every one of my other siblings. But yeah, having that plan in place. And I think once again, for me, what I hear a lot in these episodes is having a plan in place, thinking it through, going into your finances with forethought. We're going to go ahead and do one last thing before we close the episode today. We're going to hit some rapid fire questions, quick answers. What's one financial lesson you wish more people understood?
Gap insurance.
Oh my gosh, that's a good one.
Love that. Okay.
That is great. Saving.
Okay.
Credit.
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 All right. What creates financial peace?
Savings.
Planning.
All right. What's one thing people overestimate financially?
Interest rates.
Yikes.
The time in which to pay back your credit card balances.
Yeah, and I have to agree. Interest.
Okay. What financial habit has had the biggest impact on your own life?
Set it and forget it. Get another savings account that is not your normal financial institution. Set it and forget it.
Savings, so I can go on the travels I've started going on.
Yeah, savings.
Okay. Where did I go on my list? What's something financially healthy people do that rarely gets talked about?
Establish trust accounts.
Investing.
There you go.
Investing.
All right. What's one financial behavior well, we're going to start that over. What's one financial behavior that quietly causes long-term stress?
I'm sorry, repeat the question again. I lost.
One financial behavior that quietly causes long-term stress.
Late payments.
Late payments is a good one.
Social media and Amazon.
There we go. I'll say lifestyle inflation.
Okay. What's one thing working at Hapo changed your perspective on personally?
You can never have enough savings. You can never.
Savings and credit.
Yeah, I was gonna say credit. Building that credit.
Okay. What's the financial truth that people usually learn too late?
If you can't buy it with cash, you probably don't need it.
Credit reporting is not real time.
That is true. Takes a while. Can you repeat your question?
One financial truth that people usually learn too late.
Starting their credit late.
Okay. What's one mindset shift that can completely change someone's financial life?
Ask what your interest rate is. I think that's a good one. Ask what your interest rate is.
All right.
Sorry. Jacob's the winner.
Yeah.
All right. With that, we're going to go ahead and sign off today. Until next time, this has been Dollars and Cents, Hapo Community Credit Union's Financial Literacy Podcast. See you later.